Good morning, ladies and gentlemen. So before we start, let me give you some information. So on your badges you have the QR code, basically where you can access the Telegram for the event, Astana Finance Days, and we encourage you to use the Event Rocks application, basically to connect with any speakers and other participants of the event. And of course, before we start, so let me extend our sincere appreciation for the golden partners of the event. So that's Visa, Freedom Broker, and Kaz Minerals. So overall, let me welcome you to the panel for alternative investments, where we will discuss different strategies, different things in terms of the hedge funds, real estates. I think we have a very good panel of experts in different kinds of some people are arriving in different kinds of the industry. So first of all, it's my pleasure to introduce Matthias from Lazard Asset Management. So Matthias has over 30 years of experience in a leading German bank. So basically he'll be speaking on his topics. Robin Butler, so my colleague from VC, so he's quite active in Central Asia. Surgeon Capital is one of the leading, I would say, VC firms which actively invest in the region, so he'll speak a little bit on that. Then we have Peter Nagy, co-founder of Equilibrium Capital. So Peter has a background in law and finance, which helped him lead lots of sustainable deals in the region. And we have one speaker which is online. His name is Zombor Deli. He is the Deputy CEO of Granite Asset Management. So if somebody can put him on the screen, that will be good. Hello Zombor, can you hear us? Okay, no sound, but we'll have it later. Okay, good. And last but not least, Mr. Aset Abdegaparov, who is the CEO of Provident Fiduciary Ltd. So Aset is very well known in the finance industry of Kazakhstan, and I believe he is the first one to create real estate fund under AFC legal framework. So he'll speak a little bit about that. So I think I will start with Matthias, with you. So Matthias, I would maybe you could comment, give us a breakdown on liquid versus illiquid assets. I mean, what's the tendency? Well, as you know, like private equity assets sometimes have more premiums over public assets. So if you'd comment, what are the recent trends? I mean, what's your experience? What kind of cases did you have within your bank? So, but before I think we'll start, maybe let's, and myself, I'm a CEO, I forgot about myself, CEO of White Hill Capital, so we do also manage and VC fund called Tomorrow Venture Fund. So if you would give us a little bit of applause for our panelists and myself, it would be good. So Matthias, the floor is yours.
Okay, thank you very much for inviting me to this panel. It is a pleasure for me to discuss and share with you the observation which we have done over the last 2 decades regarding alternative investments. In one hand, I would like to start to explain one sentence regarding Lazard. Lazard is doing investment banking in 2 different business units. One is financial advisory. This is M&A and restructuring, only the advice. And the second one is asset management. This is my profession. I'm working since more than 25 years for Lazard, and my role is relationship manager. Head of business development and client service, you can call it also. But important to know is the advice, not hard selling. Asset management is relationship driven. And especially also the world of alternative investments makes sense in a discussion in your advice with clients. And I will give you a few examples. Right now, the world is complete uncertain. Nobody knows what will happen. Geopolitical wise, protectionism, anything more. And I have seen in my career a lot of crises, and I have never expected these crises. And therefore, one of my strongest recommendations and observation, diversification makes sense. This is the only way to optimize risk and return. And the mega trend right now, what we are discussing with clients, and with clients I mean all clients, institutional clients and private clients. Everybody have a target to match the liabilities or a target return for his wealth. And for matching these liabilities or targets, everybody is now in the situation to find a way of diversification, but also a safe way to protect the money. And core satellite strategies are the solution so far. This means in the core you find investments that mainly match your liabilities or targets, very often passive, enhanced or liability-driven investments, very popular. But for getting a yield pickup and a better risk profile, it is important to create satellites. And satellites mean niche investments, alternative investments with a totally different return pattern and risk profile, so that you have in your overall allocation a better profile. And now I'm coming to the alternative space. I think also important to know is you have two general alternatives. One is liquid alternative investments. This is traditional-wise hedge funds. This could be listed infrastructure. Hedge funds could be long-short strategies, event-driven investments, totally different, convertible arbitrage. I think you can count 100 of solutions regarding hedge funds. And some alternatives means also like global listed infrastructure, for example. These liquid alternatives have one advantage. You can deal these in more or less in a daily trading. And the other opportunity, or the other side of the coin, is illiquid alternatives, private markets, private debt, private equity, infrastructure investment, direct lendings, and a lot of other solutions, including real estates. What is a mistake? What investors have done over the last 20 years? As of the situation that we have a low yield environment, many investors have decided I should get a yield pickup out of alternative investments without having on their radar that this is not an add-on in your yield without having risks. The risks are different. And important in the differentiation between liquid and illiquid is for illiquid alternative investments, you should get a premium for the illiquidity, a beta premium. And this is not a free lunch, and you should take into account that you can't sell very easily your private market investments. And I think, and I suggest that we go later on into a detailed discussion regarding different mistakes also in liquid hedge funds, for example, and our experience about the secondary markets for private investments. But first of all, I would like to open the floor with these general topics and giving back to the moderator.
Thank you very much, Matthew. So speaking of illiquid and investments with high premiums, I would like to pass the word to Robin. So Robin is operating in a very, I would say, hype market right now. So Robin, what do you think about, I mean, could you comment what verticals are you investing right now? What are your fundraising efforts? And how, I mean, the recent developments in the AFC framework basically helps you to raise, to work and operate in Central Asia? Thank you.
Thanks very much, Aslan. And Thanks very much, everyone who's come along today to listen to this panel. I think it was interesting, that point from Matthias on the risk premium that one would associate with private markets. I think there is also a risk premium that one would and should associate with emerging markets. And maybe a little bit of context on Sturgeon Capital. So while today we're investing in private markets and alternative investments, we've actually been around since 2006. We were founded by an Italian gentleman who saw the opportunity to be investing in more traditional public markets across Central Asia and the Caucasus. We, at the time, pitched the region, and I think this is still true, as where you have a large young population, you have structurally high GDP growth, you have diversified economies if you look on a kind of regional scale, you sit on the middle corridor between China and Europe, and from a macro perspective, it was, let's say, I think, easy to pitch why this was a region that international investors, and that was who we've always targeted, should be interested. But the challenge we had was really how you could show that the returns were commensurate for the risk you were taking on a sort of geographic and geopolitical perspective. And we had some very good years on the public market side. But we also were hit by significant currency devaluations, conflicts, political instability, and that made it very difficult to sell to investors sort of why now? Like, why should you be investing in this region today? They would always say, well, because public markets we can buy in and out relatively easily. We'll wait 6 months. And if this inflection point happens and stocks start going up, okay, maybe we miss out on 10%, but you're telling us it's going to go up 200%, so we're okay with that. And that was one of the reasons actually that we shifted away from public markets to focus on private markets as we do today. So today we manage a little under $300 million focused on Central Asia, the Caucasus, and we also invest in South Asia, ex-India, Pakistan and Bangladesh. That's split between venture, so early stage technology investments, which I head up. We're currently investing out of our second fund, LPs such as the IFC and SBI Holdings, a Japanese financial group, and also private equity. So we manage a fund on behalf of Chevron here, investing here in Kazakhstan in real and productive, sort of far more traditional private equity assets. And so, if you like, we've had close to 20 years experience fundraising for Central Asia, Kazakhstan included, as a product. Now that product has varied as it's gone along, and one of the questions that was sort of raised when we were discussing this beforehand is sort of who are the types of investors that look, and I'll speak particularly today as we're focusing more on alternative investments, although I think this region as a whole sits in the alternative bucket for an allocator in Europe or the US, irrespective of whether it's public or private, or more traditional or alternative assets. And when we kind of see three or several groups of investors that are interested. On the one hand, you have development-focused institutions such as the IFC or the Asian Development Bank or some of the European development banks who have this more developmental focus on investing in the region. They're particularly interested in private equity and venture capital to look to build sort of more of the kind of real private economy and to drive greater digitalization. Alongside that, and in a similar vein, you have impact investors, sometimes foundations, pension funds that are focused on the sort of broader stakeholders, not just the financial returns of investments. You have family offices and high net worth individuals, oftentimes who have some sort of connection to the region. Either that, in some cases, some of our investors came here on holiday, loved it, heard about us and invested in one of our funds. In other cases, they've had business relations with the region and therefore understand the opportunity and understand that there are returns to be made that are commensurate to the risk premium. I think perhaps the hardest group we have to sell to, and the ones where we have spent the last 4 or 5 years sort of pitching and presenting the region, are the purely return-focused asset allocators. These are, and I think something that can be easy to forget when we're sitting here in Kazakhstan and in Central Asia, is that an asset allocator in the US will have a small slither that they can allocate to emerging markets. Within that, most of what they'll do will probably be public markets, debt and equity. They may, within that small slither, have an even smaller slither that they're willing to do private markets. So actually, when we're pitching both venture capital and also private equity funds to international investors, there are only a small percentage of people that are interested or willing to take the risk. And within those, where the kind of broader assets of those people manage, it's a fairly small area that we're going for. And that's why we try and spend as much time as we can bringing investors to the region, because once, as all of you who are here today, some of you maybe the first time here in the region, you spend a day or two in Kazakhstan or anywhere else, you have a much better understanding of what's going on, and you don't need me to tell you anymore. But unfortunately, we have to do some of that presenting otherwise. I'm not sure if I've actually answered the questions that you had there. I went slightly off ones that were there before. Happy to speak about something else, but I've probably spoken too long anyway.
No, it's good. Thank you very much, Rob. I think I encourage the audience maybe ask questions later. I have a couple questions on you on Nexus, how you see them and where they are, but we can speak about that later. So thank you very much, Robin. So next, let's us try and basically put Zombor on the screen. Hi, Zombor, can you hear us? Can you hear us? Can you say something?
Yes, I can hear you.
Oh, excellent, Zombor. Thank you very much. So, being with us on a distance. So, a question for you. So, you're an expert in sustainability. So, basically, can you please comment what makes a real estate investment green or sustainable? I mean, does it give some kind of a premium for that? So, and a little bit elaborate on your experience in that field. Thank you, Zombor. The floor is yours.
Thank you very much, and thank you for the invitation. I'm from Hungary. I'm from the Granite Asset Management company. We does asset management in several ways. We do equity, bonds, but our main focus is real estate and alternative investments like private equity. What makes investment green or sustainable? That's a very good question, and there are exact answers to that, because there is a regulation on that. We go back to 2019 and 2020 when in the EU two regulations came to life. It's called, one of the regulations is SFDR, one of the regulations is called taxonomy. So these regulations are very detailed when you can call your investment fund green, and what is the name of these investment funds. There are three types of investment funds in that way. There are of course so-called gray funds, which are not green at all. There are SFDR 8 funds, they are called light green. And there are SFDR 9 funds, they are called dark green. And the regulation is very strict about when you can call these funds green to avoid this so-called green washing. So the investors can be safe and sure that you invest in the goal of to make the world more sustainable. I will tell you some aspects and something about these regulations. So, in order to have your investment fund as a light green or a dark green, you must fulfill some of the regulations. I will highlight two of these criteria. One criteria is to meet there are six goals when an investment can provide in order to make the world more environment friendly, to contribute to the environment in a significant way. So six criteria. One of the climate change mitigation, One is that climate change adoption. One is to protect water and marine resources and the sustainable use of this water. One is the transition to a circular economy. One is pollution reduction. And one is the restoration and protection of biodiversity. So you must fulfill one of these goals and not to harm the other 5 goals. Let me speak about them. Let me tell you an example of that. And I have an investment fund, and I want to make a green investment. As we are a real estate fund manager as well, we have the most expertise in real estate investments. I will tell a real estate investment example. So the economic activity is building a new house, new building, which is producing 10% less energy than a benchmark of the government, for example. So actually 40% of the world's total energy usage comes from buildings. So it's very significant. So if you could decrease the energy consumption of the real estate, then you make this sustainability goal. So the new construction of a new building is the economic activity. The goal is to contribute to the climate change mitigation, and the investors don't harm the other 5 criteria. So the regulation is very, very detailed. So I will take just one example how detailed it is. So to not harm the sustainable use of water resources and protection of water and marine resources criteria, that you must not, the taps in the kitchen and in the bathrooms, the water flow of these taps cannot exceed 6 liters per minute. So it's very detailed, very exact. So in that way you don't waste water, basically. So there is a very, very, very strict regulation, very detailed. It's very hard to comply all of that. But I believe in the long run it's worth all of the effort, and the investments become more sustainable, and it will provide for the whole world to be more green and sustainable. Thank you.
Thank you very much. Some more stay with us. Maybe we will have some questions for the audience. And a small note to Aset and Peter, please speak to the microphone, because sometimes people on the back, they don't hear you. So next, Aset, Mr. Aset, so I know that you are one of the first ones to establish a real estate fund. So if you could a little bit elaborate on that, what was your experience? And overall, I mean, there is such new tendencies as tokenization and real estate and other things, so maybe you can elaborate on that also. So the floor is yours.
Thank you so much. My name is Peter Nagy, and I'm a lawyer and the co-founder of the Equilibrium Capital. And this is to be here. It is my honor, and I would like to thank you for the audition, the huge interest in our session. Let me allow to me, first of all, start a philosophical question. Is the cyberspace and the alternative space a part of the geographical space or not? And if it is, are the challenges the similar regarding to the both one, or are the challenges specification to regarding to the cyberspace, alternative space, or to the geographical space? By the end of my speaking, take it easy, we will answer the whole question. It won't be opened. First, let me observe the geographical space and its challenges. The previous time, the geographical space and its challenges was only one thing, the distance. Miles, kilometers, meters, traveling hours, and to solve the problem, how can we track the huge amount of the cash? Nowadays, the free movement of the capital and the online transferring, this challenge is absolute, doesn't matter. I think that, and it is my professional opinion, nowadays the geographical challenge is only one, the culture challenge. Why do I say that? The equilibrium, for example, the equilibrium capital is a local company, the regional company, and the global company at the same time. We are headquartered and licensed in Hungary, issued by Hungarian Central Bank. But we have EU pass, so we can provide financial services within the single financial market in the EU. Therefore, we are regional company. But we are a global company either, because we have license in Kazakhstan, we have license in Dubai, and we will under licensing process in Qatar. From Qatar, we will reach out Southeast Africa, and we can connect the largest sukuk exchange in Indonesia. The question is, where is the distance? There's no distance to operate as a global private equity fund manager company. But we must to know the cultural issues and the cultural specific things in that country where we are operating and managing funding. Just a simple case. I'm Hungarian Catholic, but I have license in Kazakhstan and I will have license in Qatar to operate so-called Sharia compliant fund. It is a religion philosophic paradoxon, but not. If I make research, and for example in the Sharia law, and I will find out a cross point, for example, the ethical business. So therefore I said there's no geographical challenge at all. There is only cultural challenge in the 21st century. The second pillar is the cyberspace and the alternative space. It is very, very interesting because if we are doing business in the cyberspace, alternative space, it means that we are doing business is the eternal space. But we don't think that the geographical, doing business in the geographical space is in half food. We are in the alternative and the cyberspace. Why do I say that? If we transfer money, it is going on the online. We organize meeting online, Zoom, video conference, and other things. If we are doing business in the geographical space, in a half foot, we are in the cyberspace and the security space. The new challenge within the security space is only one. Are there borders or not within the eternal space, the alternative space, the security space? Let me show you a practical business case. The equilibrium capital apply for a license, a very unique private equity fund. We have a gold mining project. By the way, I have a ton of subscription agreement, and if somebody is interested in the business, I have pencil for the signing. And our business plan is We will issue units through the security exchange, capitalizing and collecting money for financing the gold mining. And our investors will pay for the units through cyber exchange with digital asset cryptocurrencies. And these cryptocurrencies will convert fiat money, and we will start to finance the gold mining. And after starting the mining, and the pure gold will take out under the ground, I will issue a token, two types of token. Commodity token on the base of the pure gold, and security token on the base of our units. It is a unique initiation in Kazakhstan, and I do believe strongly it will a success story. And the challenges by the issuer side, the challenges is to find the appropriate stock exchange, cyber stock exchange, and the second one is the tokenization to provide token to the possible investors. And the challenge is by side of the investors to finance, to buy with crypto asset and cryptocurrency units issued by our funds. So we can say that nowadays the geographical space and the cyberspace, the alternative space, is not a separate space. They are in a whole circle. And yes, there are challenges regarding the both one, and there are challenges, special challenges regarding to the cyberspace and regarding to the geographical space. But the real practical challenges within the cyberspace and the alternative space are the next. Just some example. The first one by the regulator side, the authorization, regulation, supervising, and the controlling of the trading and the whole business within the cyberspace, within the alternative space. And of course, very important to solve the problem of the anti-money laundering challenges, the regulation and the execution of the anti-money laundering rules. Very important, for example, to recognize the private financial market. As a private equity fund manager, I can set up an owned stock exchange, a private stock exchange, and I can do that. I issue the units through owned financial market. Where is the appropriate regulation, rules, and who will protect the investors? And the last one, I mentioned the Sharia business. Is Sharia compliant to do business within the eternal space, the cyberspace and the alternative space? It is not just a legal problem, I think. It is a religion philosophic problem, and it will be solved in the future. Summarized, if we would like to be successful in the future in the cyberspace and the alternative space, we have to be adaptive, and we have to be innovative in the business as the equilibrium capital. Thank you for your attention.
Thank you, Peter. Quite energetic and interesting speech. So I said finally the floor is yours. The same questions, real estate fund, how does it perform? How did you do it? What new technologies do you use? Please.
First of all, a correction.
Peter, sorry for a second.
Yeah, sorry.
I'll get you another question for you.
Yes,
Thank you.
Thank you, Peter. Yes, yes. We had launched 3 real estate investment trusts here in AFC. The first one we did in 2002, and we acquired the first asset back in 2003, like a year ago. It was August 18, and the product is new. Up to the date, most of the people have like 2 alternatives. You go on and purchase real estate, either residential or commercial space right at the construction phase. You earn like 20 to 30% annual percentage return for a year and a half, 2 years. Yes, for a limited time. You invest into development. The other alternative is you purchase the same apartment or commercial real estate and lease it out. But the problem there is that each investor is exposed to a particular real estate, particular square meters. You buy an apartment, you buy like some commercial real estate, lease it out, and you have a risk to a particular lessor, to a particular maybe small business who rents an area from you. And real estate investment trusts, they provide the most important feature is the diversification of risk. So you purchase like a small percentage of a whole large piece of real property. And that real property is managed by a professional team. They run tenant relationship, they service the facility, and owners, they do not have like headache running around fixing various things in the property. They don't run around finding new lessors if someone leaves the property. And this is the big thing, I think, for investors here in Kazakhstan. The problem is the product is, as Messi says, it's classified as an alternative investment, and it is available only to qualified investors. So we cannot sell the product to retail clients. We cannot sell it to individuals. And currently, the regulations are limiting the single placement of to $50,000 in one hand, and we're just discovering various ways how to market it. Currently, we sell it to high net worth individuals that we know. It's like we have something like around 15 to 16 clients, and we place our products within those limited number of people. Of course, we are trying to target some institutional investors, but in order to sell our products to institutional investors, most of them are like foreign companies, foreign entities, and we need to really adjust the yield. Currently, most of the yields in our products are tenge denominated, and we have one product that REIT, Real Estate Investment Trust, that we have been able to convert the lease agreements to US dollar denominated cash flows. So to make the yield US dollar yield. And another problem that Matthias raised earlier in this session is the interest rate environment. In all over the world, it is like low interest rates and low yields in alternative investments. Here in Kazakhstan, the interest rate environment is like different. We have quite high base rate, like not the Fed funds rate, but the rate that is set up by the central bank. It's like around a bit over 14%. So alternative yields, like deposit yields, are quite high, going from 12 to 15% in various banks. And for retail investors, it is not obvious. They have an opportunity to invest money in short-term deposit for, like, let's say, 14%. And alternatively, they have a real estate investment trust unit that generates a dividend yield of 12%. So mathematically, it's like for them, it's for retail investors, it's not obvious that this 12% is a long-term yield. Yes, and you invest and 14% in deposits is like you have it maybe for a year, maybe for 2, but not in the long term. So this is a big challenge for us in this market and in this interest rate environment. However, as I said, we have been able to convert one of our products from 10K yield to US dollar yield, and we are trying various venues right now. There are several platforms available for placing units and shares of exempt funds that are available to professional investors. So some of them are European, some of them are American, let's say like Clearstream European platform. It's a subsidiary of Deutsche Börse, and we are trying to place our units in Clearstream platform. Also, we are trying to actually exploring our ways to list a token as well. We want to tokenize a share of our fund, of our first real estate investment trust, and hopefully within the next 2 to 3 months we will be able to place the product, the token.
Thank you very much. So I think we had a good talk speaking about hedge funds, VC funds, real estate funds, and even Sharia compliant principles. So I think we have 20 minutes to ask any questions to our panelists. Do we have some? Maybe if we don't, then maybe I'll start with, okay, please.
Advertising and so forth. So for this particular market, I'm talking about Central Asian market, is the risk associated because the products that this market produce or could sell, thank you, sorry for that. The products that this particular market could sell to the international market. I'm from Dubai, from UAE, and whether these particular products are able to communicate with the different markets such as UAE and Dubai. Is that the risk that we are talking about because there's not that particular clarity into these particular products? Or we really talk about that particular risk really driven by the fact that the unstable currencies and investment where exactly what Mr. Assets here has touched. So could you clarify that more for us, please?
Sure. Thanks very much for the question. I think what we believe in and why we do what we do is that there is actually a misperception between the sort of what people perceive as the risk of this region and the reality. Now that misperception on an international level just comes often from a lack of understanding. We oftentimes, if we're speaking to investors, we're having to sort of explain Central Asia and the region in a way you would never have to explain the US. Everyone knows what's going on in the US. They read about it. They see it day to day. Here we have to kind of sell the story, and oftentimes people have preconceptions and misconceptions. If you look at the media in the UK, where we're headquartered, it tends to only pick up when something goes wrong. It doesn't oftentimes capture the good news stories because, I don't know, they don't, good news doesn't sell as well. So people say, well, I've only heard of this region when something has gone wrong, therefore it only goes wrong. So we think that there is a gap between perception and reality, and that actually the risk here, which if you come and spend time on the ground and you invest with organizations which have an on-the-ground presence and an understanding of where real risks lie, and undoubtedly there are geopolitical risks, there are macro risks, but they're risks that we think can be managed by choosing where you invest, choosing who you invest with, and how you structure such investments. In some cases, I mean, we don't do debt, we don't do real estate, but there are opportunities there, and if you can structure it in the right way. But maybe just to touch on your question of the risk of whether products can be exported. And if I take that from the early stage technology standpoint, speak two of the companies we're invested in out of Kazakhstan. I'll speak about one, which is a business called Farel. It is building the operating system for small and medium-sized airlines across emerging markets. It's a Kazakh founder. He previously founded an online travel agency here in Kazakhstan, which he sold to Kaspi. So he has that experience of building and scaling and exiting a business. He has deep domain expertise, and he's taken that to now build a product where the first customer they onboarded was in Ecuador. So that's where I think is a small example, and admittedly a small sample size, but there are many others where you have entrepreneurs in the technology space, and Aslan, I'm sure, can speak about many as well that he's working with, who are building products from the region that are scaling and already are operating in other markets. So there is a misperception, and I think, yes, there is an opportunity for companies from Central Asia, or from Kazakhstan, to scale into international markets.
Thank you very much. Other questions? Okay, please. Can you pass the microphone, please?
Thank you. I have a question with regards to your real estate fund that you mentioned and that you spoke about that you want to tokenize. So what are the benefits that you see from the tokenization, especially that you are right now not yet dollar compatible or dollar pegged, but you're fully exposed to the tenge? And on the other hand, how much does that also help you to diversify your overall portfolio and your investor base?
Well, for tokenization, our primary target was to diversify, as I said, our investor base, and you see, currently all of our investors are individuals, our locals, Kazakh people, but high net worth individuals. As I said, we have like 15 clients, and we want to make the product available to a broader base of investors. And we are exploring whether, if we tokenize the shares, whether those shares will be available to a larger group of investors. We are trying to find out whether the company that is going to tokenize our shares, will it become the holder of our shares? So it will be a qualified investor. Let's say they purchase like shares in our fund for $5 million. And then they tokenize the shares and distribute it to their retail clients. So they will be able to split that 5 million stake into smaller pieces and not limited to $50,000 that we have here, a limit for professional clients.
But in Kazakhstan?
No, it will be available we will tokenize the shares on an international platform. It will be available worldwide.
So as long as you're not dollar pegged, where's the interest for the investment risk capital?
We are dollar pegged. So we pegged the lease payments to US dollar to make it to remove that FX exchange.
Yeah, thank you very much. I said, Peter, maybe you can also have something to speak on that, on tokenization. No? Yes, please.
So the gold-based tokenization, but it will be in the future, not now. I can say more because the lots of information is business secrecy. So therefore, but as I said, it is a very early phase now. The fund is under preliminary authorization, and therefore there's not lots of information. Sorry.
Thank you very much. So I have a question for Matthew, I think.
Sorry, may I add to tokenization invitation to the panel at 5 p.m. Because this is a topic in this panel in a collaboration between Bitfinex, Skybridge and us. So I invite you to this panel.
Good. Let's not take that space. So, Matthias, a question for you. So, you know, the capital market is quite thin in Kazakhstan Central Asia. So, what do you think verticals would you look at? I mean, in terms of alternative assets here, and where do you think the exits can be for investors invested into projects here? I mean, what are the markets? If you comment on that.
Okay. First of all, let me pick up also the discussion regarding risk management. I think this is, in my point of view, the real topic of alternative investments. I mentioned at the beginning the sense of diversification, but what I have not presented is forecasts are not a good consultant and greeds are not a good consultant. So I think the due diligence is for all investors really important, completely independent if you are located in Kazakhstan, in Germany, in the United States, in Dubai. And I would like to discuss here more a bit how can you do the due diligence for private equity, to trust in the investor, for example. The markets are always right. If I select a long-only fund, for example, in small caps, I have a daily valuation of stock markets. But to believe in the valuation of a private equity fund is much more difficult. And I have seen many investors, they have mistakes in this space. And investing in alternative investments is, from my point of view, more negative selection. Avoid traps. And therefore, I would like to discuss, for example, with you, what is your conviction that the prices of a private equity fund is always correct? You have not a stock market where you can see where the price of your invested company is.
I mean, the only two prices that are really correct are the price you pay at the beginning and the price you sell for. I mean, anything else in between is, I don't know, I can make assumptions, you can make assumptions, we can arrive at very different things. I mean, our approach is to be pretty conservative on the venture side. We will only write up an investment if there's been an external funding round that validates that valuation. That has to be an equity one, not a kind of convertible debt or a safe round. But yeah, there's only two that really count, and the one that really counts is what you sell the asset for, and it is a challenge, because in the meantime, I mean, especially from a fund manager's perspective, I'm fundraising at the moment, and I'd love to sort of fiddle around a bit with the numbers in the first fund and boost the IRR and this sort of thing, and it's really easy to do. I can make very compelling arguments why things should be valued higher, but we don't go and do that, because ultimately that just exposes us to then having to revalue those down if anything goes wrong, and it's also from a kind of moral standpoint, I don't think it's the correct way to do it. So it's a very difficult question.
Apologies if I can add to that, because I want to take. Sorry. I want to head on what exactly, because this is a very interesting point that you two gentlemen had made, and trying to link that with Peter, because Peter, I may misheard you clearly, but when you're saying that the Sharia is a matter of philosophical or religion, I would really not be in that position at all, because in understanding that particular risk and understanding what exactly this particular investment will be able to bring that particular yield under the Sharia compliance, under the Sharia structured product, it is absolutely an area that needs to be built through the technology or through the standard way of investment on its own merit. So to what extent that you believe in taking all of these particular risks, whether that is the projections and so forth, and trying to plug that into the Sharia complex and believe that could be a product that could be just mimicked with other products at the same time, unless I misheard you.
Okay, thank you for the additional things, but I think that there is a little misunderstanding. I agree what you said to me. I just would have liked to point to the Sharia is a complex legal and religion system, and I am not a Sharia lawyer, of course, but the new aspect of the fund managing within a cyberspace, an alternative space, it is a new challenge, not just the Sharia compliant based business, but to us so-called conventional business, and the Sharia is a very difficult and very ethical approach to the business. Therefore, I thought that could be arise a little difficulties within it, but they're not substantial, just fine difficulties. But the Sharia lawyers in the Sharia boards will be handle these little difficulties. That's all. Thank you so much.
Thank you, Peter. Any other questions? Please.
Hello, my name is Amir. I'm from Almaty, Center for External Economic Relationships. I want to know about venture capital. What view, how we can develop here, because we have a dynamical markets of startups, and we try to make venture investment on it.
Yeah, let me handle this question, Robin. Yeah. So I think pretty much venture capital is developing quite good. It's the numbers are doubling every year. I believe last year the total investment into venture were like 80 million and more, and that's just private. So in that sense, I think in terms of if you look at the venture capital investment cycle, so we have lots of angel investors, we have small venture funds, we have I would say Series A fund, which is basically starting capital, Tomorrow venture fund, which we own. So in that sense, I think the industry is developing a lot. What I would suggest basically is to look at the verticals. So that's one thing basically, and the most important thing is to look at scalability, because in any case, and that's my suggestion, and that's what we discussed with Robin. So do any projects which are scalable, basically started here doing MVP, I don't know, other POCs, and then just scale to some other regions. For example, for us, we are looking for talented teams here in Kazakhstan, Central Asia, which are mature enough to scale into many regions. That's where we operate and where we believe can be our exits. So in that sense, there's just last question to Robin. So Robin, what verticals are you looking at, and where do you think the exits would be?
The question on how we'll exit is probably the one we get asked most by our investors, and because we're talking about the valuation, that's the only time that it really matters. Just in terms of verticals, I mean, the core of our thesis is that Central Asia and the Caucasus, as well as the other countries we invest in, are early in their digital transition from offline to online, that you have relatively low e-commerce penetration, digital payments, use of software by businesses, and that these are all opportunities which you've seen significant businesses built and exited in other emerging markets such as Indonesia, Turkey, and Brazil, which are further down that kind of development stage. So we primarily focus on B2B software, fintech, both the infrastructure side and also on the lending side, and marketplaces, e-commerce, both B2B and B2C. We look opportunistically elsewhere. We're sector agnostic, but those are the kind of core verticals we focus on. In terms of where the exits come from, so you have a spectrum, and we did some work on this last year of looking across our markets of sort of what has driven exits, and you have the right tail outcomes. You have the Caspies of this world, these businesses that can build, let's say, sort of multi-vertical companies at a scale which can then be IPO'd. And the last I checked, Caspi was sort of plus $25 billion now with its listing on the NASDAQ as well. That is the right tail outcome. If any of us venture investors in this room hit that outcome, then we'll be laughing. I mean, so will our investors. Kind of, let's say, more towards the more typical outcome that I think we are underwriting is more of a strategic exit. And that strategic exit, I mean, you can look at Careem being acquired by Uber in the Middle East. That was a multi-billion-dollar exit. You can build those sort of opportunities. What you need to build in order to do that is really to be the number one player. You build distribution and dominant distribution such that for anyone else looking to enter the market, it is effectively impossible or close to impossible for them without having an absurd amount of funding to be able to compete with you. And typically, actually, people want to see that you have very strong growth and a runway of growth, as well as having positive unit economics. And one example that we look at is PayMe in Uzbekistan. PayMe is a wallet and a payment service provider, sort of P2P, not entirely dissimilar to some of the functions that Kaspi has here. It was built by an Uzbek entrepreneur. He never raised money, and he exited that to TBC, a bank in Georgia that was looking to enter Uzbekistan. It was looking for a player that was a means of acquiring customers and giving it distribution for its own lending products, as well as capturing deposits. The initial transaction was they bought 51% at a $10 million valuation, and they bought the remainder earlier this year at $120 million valuation. And that shows you kind of that where you have built a market-leading company that has captured distribution, and PayMe does around 60% net income margins on around 20 million in revenue these days, that you can generate an attractive exit multiple that can deliver returns for early stage investors such as us.
So thank you very much. I think we're pretty much out of time. So first of all, thank you very much for the speakers who came abroad for this event. I think we have very good 2 days. So let us give an applause to our speakers. Yeah, and we can continue the discussion later on. Thank you very much.
Біздің достығымыз уақыт сынағынан өтіп, 30 жыл ішінде нағыз гауһар тасқа айналды. Оның әрбір қыры біреудің бақытты сәттері, біреудің жетістігі немесе арманының жүзеге асуы, орындалған армандары. Біз Қазақстан тұрғындарының өміріне оң өзгерістер енгізіп отырғанымызға қуаныштымыз. Біздің клиенттермен қарым-қатынасымыз гауһар тасының беріктігі секілді ұзақ мерзімділікке, сенімділікке және тазалыққа негізделген. 30 жылдағы ең үлкен жетістігіміз қандай? Клиенттердің сенімі. Ол гауһар тастай өте қымбат.
Nowadays, ERG represents 1/3 of the mining and metallurgical complex of Kazakhstan. We are the only manufacturer of high-grade aluminum in Kazakhstan. ERG is the world leader in ferrochrome production. ERG is a major railway operator in Central Asia. We are one of the key suppliers of electrical power in Kazakhstan. It is one of the largest suppliers of iron ore in the Eurasian region. ERG has invested more than $14 billion in the development and modernization of enterprises in Kazakhstan. ERG allocated more than $1 billion into social projects. ERG employs more than 60,000 people. ERG paid more than 3.5 trillion tenges as tax contributions to the budget of Kazakhstan over 30 years, making over 2.5% of the country's GDP. Eurasian Resources Group, to be the best at what we do, to go forward along with the world progress holding true to our values, to discover carefully the potential of the earth and humanity, ensuring prosperity for those who rely on us.
Imagine a world where your assets trade 24/7 and settle and transfer at the speed of light. Equities, bonds, and other products can be issued as digital tokens with clearly defined rights and obligations, leveraging the best of traditional finance and digital asset technology. Bitfinex Securities is a fully regulated exchange licensed for both primary market issuances and secondary market trading. And in just a few days, Tether is launching a revolutionary new platform that bridges the gap between the physical and digital worlds, making it even easier for issuers on Bitfinex Securities to create and manage tokenized securities. You are now in a world where you can ensure the true value of your assets will be realized, with your tokens traded on markets used by some of the world's largest investors. Thanks to the vision of regulatory regimes in the AIFC, and now also El Salvador, issuers and investors can interact in a fully regulated and transparent environment. Regulation is meeting innovation. Bitfinex Securities allows issuers and investors to interact more directly with no middleman, increasing efficiency.